Welcome back, traders, to another video where we're going to be looking at the Fibonacci foundations. So in this video, we're going to be looking at the Fibonacci foundations and actually how to effectively use Fibonacci on a higher time frame. So I'm going to be using, for example, the daily and the weekly time frame in order to use a Fibonacci pinpoint and the sequence that is commonly used by many traders. And if you actually use these in a way that's correct on the chart, then a lot of the other levels and other tools tend to line up, and you can build up certain confluences basically. So we can use the Fibonacci levels to actually trade to and create targets. So if we flip to the weekly chart here on the Euro USD, if I pull up some examples and of where Fibonacci has perhaps worked in the past in order to actually determine trade levels, trade setups, and where the pinpoint accuracy comes from when it comes to using Fibonacci. So if we take, for example, just this trade movement, now obviously here we can see a downtrend with a series of lower lows, lower highs, lower lows, lower highs. So it's important to know the actual trade direction. And, it can be quite obvious, but to a new trader, you want to pinpoint the lows and the highs. In this case, we've got a low here and a high here, but this is a lower high because it's lower than this high. So this is a lower high, new lower low from this lower low, lower high, not quite a lower low here, but we did in fact get a lower high and then a new low. So if we take, for example, this period here, now Fibonacci, the way we use it is A, B, C, D pattern. So if we take this point, first point here within this sequence as A, this point here, significant low, as point B. And if we use the top of the wick here and the bottom of the wick at point B and draw our Fibonacci, click and drag it to here, but then scale it all the way across, we actually have, so the 100% at point A, the 0% at point B, and our C retracement, 80 to 90% of the time we want to be looking for this golden ratio level, which is basically 61.8 here. So if I mark this here, which we did come all the way up to, now once we have reached the 61.8, our first target towards the next level of the Fibonacci sequence, so we call this A, B, C retracement at the 61.8, and then the D extension level at the minus 27. And as we can see, the market fell all the way into this minus 27 level here. Now, the Fibonacci works on many different scenarios on the higher time frames and even the lower time frames, but you just need to do a lot of back testing and figure out actually how to use it. So if we come into more of recent price, and let's flip to the daily and let's have a little look at the current price. So if we look at the daily, we can actually see that we are in fact in an uptrend. You can see it's by the higher highs, the higher lows, higher highs, higher lows, and potentially new higher high. So if we take the significant points, so here would be this low here, and we can also see that this is the significant high. So we can take this as point A and point B. Now we're going upwards this time because we're in an uptrend. So again, use the bottom of the wick at point A, top of the wick at point B. And here we've actually come a little bit lower than the 61.8, but we've actually come between the 61.8 and the 78.6, slightly lower than 78.6. But yeah, again, we have held within sort of the region of this zone here, which is sufficient. And obviously we can use this in combination with 200 daily moving average and also the moving average crossover here on the daily. So we can see that Euro USD has actually effectively created a bounce at this level here. So where do we target? So we've got point A, point B, C retracement area, and then our D extension 1 is at minus 27 here. So we can actually put a line in here, and usually I like to just square it off to the nearest round level, which in this case would be 1.2550. The very next upside target would be 1.2800, roughly at the minus 61.8, which is Fibonacci D extension 2. So we can we can see here how this has worked in that scenario there. Let's pull up another scenario then. So if I go back on daily, okay, so if we look at, say, all this sideways movement here, if we actually look at where the trend actually took off at in this case, then we can actually see, if I was just to quickly put on here A, B, and then here we can see again C 61.8. So we've got A, B, C 61.8, and then we did achieve both of the extension targets there. So identifying the C retracement is quite key when it comes to using the Fibonacci tool. In this case, let's look at this wick here and this wick here. So we have point A, point B. If we were to use these, again, I'm just sort of being a little bit experimentative when it comes to the chart here. So we've got point A at the top of the wick, point B at the bottom of the wick, and our C retracement here, again, perfectly aligned with the 61.8. And we've got here, bang on, the extension target at -27. So we can see actually how this sequence plays out many times. We can see here, I'll just draw this. So we have A, B, C retracement, D extension. So it can happen many times over and over again. And that's what we want to be using when it comes to our technical analysis, and also use it in alignment with the other key levels. So in this instance here, if we was to plot a key level line here, we could look left and actually see the support here, prior resistance levels. So it can match up with levels that it has been to in the past to make our targets a little bit more stronger in terms of targeting them, and also using the Fibonacci as a great foundation basis to your technical analysis when it comes to finding target levels. So that's it for this video. I will cover Fibonacci in a little bit more detail and how to use the other various levels in the future. And stay tuned for more blog posts to come. Make sure you like and subscribe, and we'll see you in the next video.